welcome to TheoTrade. This is Don Kaufman. It's January 13th, 2020, and you are watching the TheoTrade evening video. S&Ps trading to the upside again. I mean, you have to sit back and start to laugh. Another day, another rally. Well, with those S&Ps up 20 and the market's on this forever grind to the upside, it's time, obviously, once again, to discuss some of the upside strategies that we are using to take advantage, of course, of some of, number one, the low volatility, and number two, this constant, feeling that there's a charge to the upside. So one of the things that I want to make very, very clear here is I still maintain quite a number of bearish positions. Get a lot of emails, a lot of questions about that. And I'm using a couple of different strategies, which, well, I'm about to show you here momentarily to offset, of course, some of that bearish risk. I've got negative delta on, which is effectively bearish trades. How do I offset some of that? Well, I'm going to display that to you here momentarily. Before I do so, it's also important to denote that we are moving into earnings, and the earnings that are coming first and foremost, of course, are going to be the financials. Now, as I mentioned in the weekend update, if you take a look at the financials, and we'll actually apply like auto expected moves, they have done literally nothing over the past you got 2, 3, 4 weeks. Today, the financials trading to the upside by the tune of about 0.6%. You can believe, though, the marketplace is getting a little bit sensitive, if you will, regarding the financials. The first batch of them come out tomorrow morning. I just want to show you the one quick aspect before I jump into some of these trade ideas, and that happens to be take a look at the implied volatility, specifically in the XLF with 4 days remaining. You actually got the IV jacked up almost to 21%. Why do I care? Because I'm telling you right now, the financials, they're driving order flow to the larger marketplace, and the larger marketplace right now being, and we'll just pull up, for example, the SPX, and if you take a look at the SPX has got about a 10% implied volatility. All I'm saying is that over the exact same period of time, the financials right now have literally over double the volatility packed in, which means get ready to move. The SPX this week is absolutely going to move. When I look at the expected move here of $30, I think to myself, that might not do it. I mean, we could move considerably more than that, considering one of the key sectors in here is again, it's got volatility all puffed up. We're ready to move, of course, JP Morgan and Bank of America, Citi, Morgan Stanley, Wells Fargo, they're all coming out. And, these individual banks aren't necessarily big market movers, but they have the ability to move the entire financial sector, and therein lies a little bit of the rub. All right, let's talk a little bit about the broader market. So if I take a look at the SPX, and I'll close that up for a second, cruise back over to the chart. As we said, people, this feels like just a one-way ticket to the upside. So on a week-to-week basis, I've been talking about these expected move. Now, let's not forget a couple of the strategies that we've been taught over time. One of those being what we term expected move butterflies. So one of the strategies I'm using right now is expected move butterflies. And what does that even mean? Now, for those of you that have not tuned into the class, first of all, you should tune into the class on expected move butterflies. It's I think eye-opening to really recognize some of the power of this particular strategy. But I'll give you the general gist, the idea. The idea is quite simply, okay, here's an expected move. Now, the marketplace is poised to tag either, again, the upside of this expected move or the downside of this expected move, okay? And we'll do so quite readily, right? I mean, if you look at a couple of expirations, look at this. We tag the upside expected move. The next week, we tag the upside expected move, right? This next week, nothing. The week after that, yeah, we tag the upside expected move. Okay, the week after that, we actually tag the downside of it. All right, but we'll count that one out. The week after that, just shy of it. It goes on and on and on and on. Okay, but I'll give you just a quick idea. Earlier today, I went out and I purchased a butterfly. I purchased a butterfly specifically inside of the SPX, and you'll never guess where I put that butterfly. I put it right to the, upside of the expected move. The upside of the expected move this week is somewhere right around 3,300. I mean, if you want to be deadly accurate with this, deadly accurate, That upside, okay, was 3,303 and change. So I laid a butterfly, but I happen to lay my butterfly right around the 3,300 mark. Okay, and earlier today, and I'll actually bring up the part of the execution in here. Earlier today, I'll create a duplicate order. I actually filled that trade specifically for $1. Now, on a butterfly like this, okay, when you can go out and you can purchase, and this happens to be none other than a $10 wide butterfly, we're paying right around $1, okay, for a butterfly that can be worth as much as about 10 bucks. And the easiest way to look at this from a mathematics standpoint, this butterfly should have about, okay, a 10% probability of making, okay, 1 penny or more. So in effect, what I'm saying is when you pay $1 for something that could be worth $10, it has about a 10% chance associated with it. And somebody says to me, why would you ever want to do a trade, Don, that only had a 10% chance of hitting? Okay. Yeah, it's a 10% chance of hitting, really? Because if you look at some of the recent weeks of trade, right, you don't have to hit the butterfly square on. You just got to be close. Some of the recent weeks of trade, let's actually go through. All right, for example, okay, last week probably would have hit the butterfly. We were right there. The week before that, nope. Week before that, you would have hit that butterfly. Week before that, oh, come on, you're on it. The week before that, this one's a question mark, but it's close. The week before that, definitely not. The week before that, absolutely. Okay, listen, we've only gone through a couple of weeks. You've already hit 1, 2, okay, 3, 4. Shall I keep going? This one you didn't hit. The week before that, it's on it. Okay, absolutely on it. The week before that, on it. Just perfect. The week, before that, look at this. You're slightly above the expected move, but literally crossing through it on expiration. The week before that, smack on it. Look at this. 1, 2, 3, 4 weeks. 5 weeks, 6 weeks, okay, 7, 8. That's 8 weeks. And that's just out of the last, a few months of trade. And yet you're supposed to have about a 1 in 10 chance in there. And people always talk about like looking for edge and so forth. See, the thing for me, this upside butterfly also creates a great hedge, okay, to the upside. So I've got some bearish positions on, but if I can hit enough of these upside butterflies, that's going to soften the blow a little bit. Another trade that I've actually used a considerable amount as of late has to do with using a back ratio and using the skew to my favor. And you can see I've already got positions in here for back ratios. But nevertheless, if you take a look at the implied volatility, in effect, what I'm doing is I'm going out and I'm going to have to open up a few more strikes in here. Okay, I'm going out and setting up different back ratios. Now, before I actually show this example, back ratios, people, you better know what you're doing with these trades. The trade that I'm showing you here, okay, is actually part of what we term our infinity spread course, the infinity spread course. So the prior trade, okay, was trading, expected moves and using the SPX butterflies and expected moves, okay. This particular one, this goes back to the infinity spread. All right, and the infinity spread gives you an upside shot. And I'll just give you a quick example of what a trade like this might look like. Something along the lines of this. Now you're like, well, what is that trade? It's back ratio. Come over here and I'm going to analyze the trade for you. And if you look at the analysis of the trade, all right, everybody immediately looks at this trade and they think, oh no, there's this giant valley of death. Now, one of the things that the course teaches you to do is to actually circumnavigate that valley of death. You can smooth that right out. You'll have some risk to the downside, but nothing too huge, nothing too crazy over here. If you left this thing on literally to expiration, I mean, you got 500 and change in risk to the very bottom of this, but we would never allow that to occur. However, this trade can have some pretty serious degrees of profitability if the market starts to get upwards of like 340. Now, time out. You look at the market right now and you think to yourself, can it really get all the way to 340? By the way, we're sitting at an all-time high as I speak. 340? Sure, why not? Moreover, okay, that trade is set up for what? Oh, some 67 days out to get to 340 in the next, in that time frame? Sure, why not? A 10% move to the upside would take you all the way to 360. A 10% move to the upside, it's $2,000. That's on a one lot. That's only one contract. Okay, this is an incredibly powerful trade. So if we go to 340, we're seeing pretty good degrees of profitability. As I was saying, we're spurting up right now into the cash close. All I wanted to do was enunciate just those two trade ideas. In a marketplace, okay, right now, that just feels like it's never going to back off, right? It's another day, it's another rally. I can't take it to the upside anymore. You have to get, okay, a little bit more, varied in strategy. Okay, be open to the idea that even if I've got bearish positions on, I'm the first one to tell you, oh, come on. You're bearish on a day that we're rallying like this. You're going to have something, okay, to offset some of those negative deltas. All right, and I just gave you two strategies for it. Upside back ratio, okay, and of course that expected move butterfly. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.